Hello, my name is Jim Jones, and I'm the Executive Director of the Katie School here at Illinois State University. And hopefully you've had a chance to learn something about the Katie School. We provide scholarships and internships and do a lot of professional development work in conjunction with Gamma Iota Sigma to help prepare students for careers in the insurance industry. And one of the areas that the industry is wanting to prepare students for relates to ethics. And so that's what I'm going to be talking to you about. Actually, that's one of the motivations for me to be doing this. I've been doing this for about 15 years now. It's a personal interest of mine. I've done ethics presentations for industry professionals. I think I'm over about 6,000 people now that have gone through, some version of what you're going to see, and usually I have some case studies and things like that. And I change the case studies based on kind of what's going on in the world. What I'm going to do right now, though, is just kind of set up an introduction for your analysis. And then the second part of this will actually get into kind of an approach for how you can resolve these ethical dilemmas. I think one of the challenges to get people to kind of think about is this isn't simply about, just saying no to things that are very simply and obviously wrong. That's not usually what gets people into trouble. Sometimes it is. But a lot of these things are things that people don't, really think through so well. So that's one of the reasons I want you to have this experience. And one of the reasons our industry partners want you to have this experience. They realize that, their reputation is based on their employees. And so if their employee does something wrong, it affects the reputation of the entire firm. So that's one reason. The other reason, our AACSB accrediting body for the College of Business, which is the most rigid accrediting body in the country, which is good for you. It's on the top. Less than 5% of the business schools go through this. Require us to have and teach education related to ethics in context. That's actually the most effective way, rather than just teaching, general philosophical principles. Now, interestingly, I'm going to mention some of the philosophical approaches. But I'm going to do it within the context of insurance, because I think that's how you would, most likely apply it. So let's go and get started. I'm going to share my screen with you here. And here we go. First of all, I like honestly to get you to think about this as ethical decision making, and for your own purposes, as well as for our industry and our accrediting body and that kind of thing. You can't purchase risk management insurance for ethical challenges. So if you make a mistake and you're somewhere in your career, then it could be financially catastrophic for you. You've put all this time here into building your credentials and preparing for a career, and if you have to exit that career and go into something else, that would be devastating. And I always like to kind of try to put some numbers behind this, just so you kind of understand what I mean here. So, and I think this is really, honestly, a fairly conservative number. It might seem like a big number, but over the course of your career, say you start out at $50,000, which I think is, again, conservative, and I think at 30, maybe 65 is also conservative. So these are, just your cumulative value of your career, the future value that you would have. So close to $6 million is not a wild number. In fact, I think it's low. I would be confident in saying that. Well, what happens if you're preparing for this career and you make an ethical mistake related to something in insurance, and it's severe enough? You're not going to go to prison, most likely, but you maybe have to exit the industry. Say you have to do this, say you make a mistake somewhere in your mid 30s. Here's what that would cost you. So it would be, about $3 million difference in what you would end up with, because you could still probably find a job in retail somewhere and be the manager of some retail establishment later on. But the differential in what you're going to make is about $3 million. And then if something, God forbid, you have something that happens earlier in your career, the cost is even more. So, like I said, you can't purchase insurance for that. And really the only way you can do is manage that risk. I want you to kind of think of it in that way of, how do I manage the risk of my career, as well as make good ethical decisions that my employer, supports, and that will help the public. Okay, so those are all good reasons. So anyway, let's give some examples of what I mean by some ethical lapses, and I'll call it that, ethical lapses, and not necessarily even things you would think of as evil deeds or anything like that, that can cause an end to your career. Steering a client that you have, say you're a broker agent, to insure a product for the sole purpose of gaining additional commissions or perks for yourself. So you get a big bonus at the end of the year, you get to travel to some nice destination, and you're getting close, and you end up saying, okay, well, use this company because I can get a bonus if I have gotten enough premium dollars brought in with this company. And even though that may not be in the best interest of your client, people find out about that, your career is probably over. Deliberately misleading a client to win a sale. That's, in the competitive nature of things, you certainly want to be doing everything you can to win the sale. But if it turns out people, realize, which they always will eventually, realize that you misled them into, going to a particular company, or, going with you instead of some other agent or broker, some other company, then that could very likely cost you your career. Making false and malicious statements regarding a competitor. Actually, that's something that you can get caught up in the heat of the moment, but that's going to potentially cost your career. And also, the industry is very small. People know what you do, and if this starts, you have a reputation for this, guess what? Nobody's going to want to do business with you. So even if you don't actually have to leave the industry, if nobody's doing business with you, you might as well, right? So here's an example of something that you can get caught up in just by kind of ignorance, and meaning just not knowing. Rebating premium, so giving part of your premium back to maybe a loyal client, good client, says, here's, you've been good to me, here's $1,000, go take the kids out, go for a vacation or whatever. As it's kind of a way of thanking them. Well, that turns out to be rebating and against the law. And the idea is, you can't, insurance companies set a particular rate, and they publish these rates of what the cost is for insurance. And if it turns out that that's not really the cost because you're giving money back, then that's a problem, and you can lose your license for that. Denying a claim that's clearly owed because of some personal animosity that you develop because of the policyholder. And this might seem weird now, but if you go into claims and you find people, not everybody's nice, and some people are jerks, especially in traumatic situations, where they've had their home burned down, or their business, they've lost their business or something. They may not be very nice to you, and it's easy to just say, okay, I'm trying to work with you, screw it, here's what you owe, here's what I owe you, here's all I'm paying you, we're done. You can't do that. You can't deny it. Certainly deny a claim that's owed something. Illegally discriminating underwriting. It's funny. There's a lot of ways you can, illegally discriminate. sometimes by certain areas, not underwriting in certain areas. There are certain classes, protected classes that you can't use to underwrite. You might find some way around that that looks okay, technically, but really is violating the principle, the same principle that people aren't discriminating against. So you don't want to get caught up in that. Again, if you're an underwriter who's doing that, and your agents who would be sitting in your business find out you do that kind of thing, then they won't do business with you. And then using accounting tricks to make your numbers look better. This is more of a managerial kind of ethical issue, but it can cost you your job, and it could potentially, depending on how bad this was, get you some jail time as well. So what are some of the causes of, we just went through the examples here of some things that could cost you a career. What are some reasons? Obviously, greed and ego, peer pressure. Sometimes people say, "Oh, there's just moral decay." I always get that answer from people. These are all answers that industry professionals have given me over the course of the years on these workshops that I've done with them. Certainly, conflicts of interest. Your interest over somebody else's, your clients or your companies, or that kind of thing. Sometimes the rewards and incentives are there that it's just kind of hard not to say no, and you want to pursue the rewards. Some people are afraid of their job, losing their job. That's one thing. Stock. If you're a stock company, you want short-term earnings and gains. As you get up in the organization, sometimes you have the power and ability to act without any constraint, without really anybody telling you what to do. And that can be intoxicating. Unfortunately, it can also, end you up in a lot of trouble. One thing I hear a lot from people is, I made that mistake because I didn't think about it. I'm just working so hard. I've got so many things going on. I'm juggling so many so many things at the same time. I just didn't have time to really think through that. And I made a mistake. Some of it's just too easy. It's just like, gosh, there's nothing to stop me from doing it, so I just did it, Ignorance, I think, like especially in insurance and financial services, there are so many laws you can run afoul of and not even know it, and then so that's why it's really important that you understand all the rules and regulations there are with respect to your job, and that's part of being a professional. So I'm going to just go through here. How do you tackle these things, and how have they been tackled? And not necessarily these particular ones; they're fairly new. But I'm going to give you some of the theoretical bones here that we'll be using later to kind of start to answer some of these questions. So the first thing you say, if you go back, over a couple of thousand years ago, or even more, you had virtues that have always been part of how humans decide if something's right or wrong, or fairness. That goes back a long way. And here are virtues that Aristotle had. Aristotle was, as you probably know, a student of Plato, and they had these virtues. He started identifying virtues. If you go back and look at a lot of those stories and Homer and those kinds of things, courage is kind of a big thing. It still is, and courage to do the right thing, courage to stand up, maybe to your customer, or if they want you to do something wrong, or your company if they want you to do something wrong, or your peers. There's still courage that you needed that you would apply. I think self-control is still to this day important. Generosity, pride. Now I look at these virtues here, and I think, wow, this is just a good leader. This is just a good employee. If you have these virtues, and these are the 12 virtues that Aristotle came up with, if you had these, I'd hire you. And I think this is the kind of thing that employers are looking for. They want, justice. Yeah, they want friendship, for, camaraderie. They want a good coworker. All these kinds of things right here would be good. Now, I think the challenge with this is how do I apply, these virtues exactly to a particular ethical dilemma, like some of the ones, we saw earlier. So I'm going to get into more of the people who are actually dealing with ethical dilemmas and how you make decisions. And we'll talk about, their approaches, because that's kind of going to get us to, where we need to be, to answer some of these challenges, ethical challenges. First of all, Kant said, there are just some moral absolutes. And the fancy term for this is a college level course, I'll call it the deontological. But if I were just, talking to you, I just say, yeah, there's certain duties you have, right? Now, teleological, and I think of teleological, think of a telescope. It's off into the future. That's the outcome-based approach, and think about, okay, what are the outcomes of this off into the future? And that's the other approach. And so we often think of the teleological as being the ends, whatever the ends are, off into the future, justifies what we do now. It's a very common approach in the political world, and it gets people in trouble a lot because they think, I'll do whatever I need to do to get elected, and then once I'm elected, then things will be good. I'll do the right things, but that sometimes that approach, can get you into trouble in your own personal life as well as your business life. So what did Kant say? He's like, he said we can never be certain about those consequences off into the future. You can't tell me how to predict, if I do this now, these are going to be the consequences. So instead, we should be following these absolutes. We can't know. So always act as if your actions would become a universal law. So in other words, if what I'm about to do would be something that everybody else would do and it would become a universal law, would that be a good thing? So he would say, that's why you shouldn't even lie. There are just absolutes. Lying isn't justified, even if you have to save a life. And killing is never justified, even to save, a few lives. He said, ask what would be the result if everybody did this. Would the world be better off? If not, then don't do it. And he would say the ends can never justify the means. Now, as you can imagine, there are some, things where you can apply that to fairly easy, either the virtues-based approach or Kant's, absolutes in these situations that we just went through. Some of these would apply very well because some of them are quite clearly, examples of dishonesty or they're the opposite of some of those virtues that Aristotle would have had. But there are other dilemmas that that just doesn't work so well with. Some people would say maybe it's inadequate to help deal with some of these ethical dilemmas. So an example, is it unethical to sell variable annuities to older people, and at what age, is it too old, because they're putting money in now, which will get paid out later. So, if they're putting in money now and they're going to die in a year, then that's probably not a great idea. Is it okay to use credit to rate somebody? And this is something very common in insurance, been going on for about 20 years. And they use it for different ways, not just auto insurance, but homeowners and other ways. Is that okay? Is it okay to use now? This is a more recent kinds of ways of rating based on correlations that they say, okay, if you have certain kinds of social media posts, this correlates with auto accidents or risk. What about responsibility of an insurer to oversee claims fairness? If they have somebody else, a third party that they have a contract with to handle the claims, do they really have to, do much other than just make sure they pay the third party to handle the claims? Or they have a responsibility to overlook all these, in which case, why do they have a third party? Why don't they do it themselves? One of the things that's common is optimization of pricing. So this happens with If you've ever traveled on a airline, they do this all the time. They'll have special deals for people that are trying to attract you, and so you have different pricing. In this case, we have like dual pricing for new customers receiving introductory discounts, and your loyal customers who've been around for a while are not getting as good a deal. Obviously, there's some business challenges to that as well as ethical challenges. People find out about that. But there's, that is that an ethical, issue, and how do you resolve that? Is it okay to use online shopping behavior to assess risk? People are on Amazon all the time. I use Amazon, or Instacart or something like that. Can I use that information to assess maybe, whether, this person would be a good risk depending on what they're purchasing? What about responsibility? Do insurers have any responsibility to help reduce their policyholders' losses? And you say, well, of course, then, that's just good business. Okay, well, what if it turns out that it costs a little more to do that, to help educate, because you got to educate your insurance, or is it their role, and they could say, look, that's not our responsibility to help our policyholders save losses. We just need to get the right premium. So if they're going to into more accidents, I don't care. They can get more accidents. We're just going to charge more for it, and we get the right premium. That's all we're concerned with. Or is there a responsibility to actually help them with, here's information that could help you to reduce whatever your business or personal losses might be. So those are things. So here are a couple of approaches that are more relativist types of approaches. One is, and they're also, I guess you call them utilitarian kinds of approaches. And one of the kind of fathers of this approach is a guy named Jeremy Bentham. So he's kind of, again, that remember the end space, the teleological, often of the future approach. Says you have to think about all of the foreseeable consequences. You have to weigh those in and then bring them back into today's decision to think about what's the best decision. If you don't think about those, it's just not practical, So he said, we would say definitely the ends justifies the means, for whatever that might be. And he would say, look, if a doctor could save 5 people by, killing, one person and taking out their organs and giving them to 5 different people, that seems like that would be a good thing. So he would say money is also very important to weigh into the consideration. So not just, how many lives or how many, people, what sufferings, human suffering, but he would say money is something you also have to think about. And I'll get into the third one, and I've got a great example based on, unfortunately, what we have going on now, that I think kind of compares, Kant, Bentham, and the next guy, who is also a utilitarian, and he is a student of Bentham. So he was actually one of Jeremy Bentham's students. And he's like, okay, Professor, I liked your approach, but I thought, having money and human suffering, and, one of them is a higher quality type of, they call it pleasure than the others. And they would, so when you're weighing that, you have to weigh human suffering differently than money. Whereas, Bentham was more just a quantitative guy, just put it on a scale, and whether it's money or suffering, human suffering, whatever, whichever the weight goes, that's how you go. So he was less of a quantitative and said, there's a different quality to human suffering versus money. So not all pleasures are equal. And his kind of famous expression was, what's the greatest good for the greatest number of people? You probably heard this, maybe even thought about this, maybe in applying a particular ethical approach. So I know, let me stop right there. So we got Stuart Mill, okay, and his professor Jeremy Bentham, who the utilitarian that said, let's include money. He's basically, you throw it all into the mix, weigh everything. And versus Kant, who had, the moral absolutes. Okay. I really do think that if they were alive today, they would all take different approaches to how we should handle our current pandemic. Um, I'm convinced that Kant would say, look, how do we save the most number of people? How many lives can we save? Whatever we need to do, if we need to, quarantine, if we need to be, put mask on, if we need to, whatever we need to do to save the most lives, that's what we need to be doing. And Bentham, I'm sure, would be at the other end. He would be, look, what was the expression some of the TV pundits had? I think it was something along the effect is the cure can't be worse than the disease. And so the cure being, having everybody quarantined and, the businesses shut down. That was too severe. And so I think Bentham would be very much in that camp in saying, look, you got to weigh all these things. You got to weigh the cost to these businesses and the economy and all of these things, as well as, human life. But, the human life is just, another, thing to throw into the pile to weigh one way or the other. And I think Mill would be a utilitarian on this, and he's kind of weighing everything. So he's not going to have absolutes like Kant would. But what I think he would say is, well, let's look at how many people are staying at home and in situations where there's domestic violence or suicide. Or people who are not getting educated now and are not going to be competitive in the workforce. So he probably wouldn't be as focused as much on the money part, but he'd be looking, but he still would be weighing things. He wouldn't be taking the kind of the absolute approach of how what do we need to save the most number of people, but he would look at kind of weighing human suffering kind of in general, kind of as a rule. So I thought it was kind of a good way of kind of thinking through how these different philosophies have existed for a long time, and we don't say I'm a Millian or I'm a Benthamite, or I'm more of a Kantian, when you apply your logic, although that would be cool if you in my world, I guess it'd be cool. I don't know if we go to a cocktail party, it probably would be cool. But anyway, but I think that actually is the way people are making decisions where they realize or not that they're taking things that have existed in other theories when they're making their decisions. So there's another one called corporate enlightened egoism. And it's basically just saying, I'm going to act in the it's enlightened self-interest is probably maybe something you've heard. And think about this on the as an example over here. The company donates money to local causes like the Riverfront Project or something, and that helps attract better employees, more customers, that kind of thing to the area, or it offers daycare for its employees and maybe additional vacation time to attract more women, maybe keep the women that they have. The company avoids using cheap child labor because they don't like the reputational risk that it has, would cause them to lose customers or maybe investors. Company invests in socially responsible funds, during because they perform better in economic crisis. Company spends extra money to design and manufacture safer products. Because not just because it's saving people's lives or injuries, but it reduces litigation costs. So that's enlightened self-interest. So corporate enlightened egoism is a kind of the approach that you have, and honestly, you'll hear this. It's a utilitarian approach, as well, and but you'll hear this a lot discussed in ethics. Is here's a good rationale. Sometimes you got to do that in business because you are making business decisions. Whereas, as an individual, you can make personal decisions. You can be more absolute and have certain virtues-based approach. But when you get to business, it seems like, people like to have some sort of justification. Even if they want to have this virtue, they feel like they need to have a business justification. So this would be kind of, examples for that. So let's get back to those questions I had. And this is how I'll conclude this. So we have those theories that we have, and those will form the framework of the decisions that we'll be making. I mean, actually, in the next video, go through the actual approaches for how we would kind of answer each of those. But they're going to be based on those approaches that we have. What are the virtues? What are the absolutes? Are there any? And as you weigh these, and how do you weigh the different monetary versus kind of human suffering and customer relationships and reputation? How do you weigh all those kinds of things? And so we'll be talking about all of those in the next video. But that's just the intro, and I think hopefully that gives you a little bit of an idea of the framework that we'll be using to answer these ethical dilemmas. Okay, so thank you, and let's see. Let's stop sharing. I'll close this out, and I'll talk to you in the next video.